Holy smokers, this ain't no jokers, everybody. We got an earning to look at with Allied Property. I own 50 shares of this baby at about, I want to say it's like 23 something. Let's take a look. Portfolio change, by the way. Ignore this. I'm just playing around a few stuff. Canadian Net, I'm deciding on what to do with it. Okay. This thing actually wants to like go back. Thank you. 50 shares at, of course it doesn't freaking show you, 24.13. There you go. I think it's actually lower. But yeah, like usual, PIMCO is holding the entire portfolio up. I actually ended the day green. So for AP it was 23.97 is actually what I own it at, and it is exactly 50 shares, $1,194. Things gonna get kind of destroyed tomorrow, I feel, because this earning report is such a mixed bag. It's so freaking mixed, but we need to go over this because I do hold it, and honestly I like Allied. Allied is a dividend aristocrat in Canada. It's the biggest office REIT, and it's an office REIT that's diversified into parking, UDC, urban data centers, which they're getting rid of and are trying to sell, and retail. They actually own retail and parking, which is really weird to me because every other office REIT you look at, SLG, and TNT, INO, none of them own any, like, barely anything outside of office properties, but they do for some reason. Despite continued macroeconomic uncertainty, our operating income was up 14.5% in the first quarter, in large part because of the development completions and contribution from last year's portfolio acquisition. Our FFO per unit was slightly below forecast, primarily because we capitalized less interest than anticipated. Our AFFO per unit was above forecast. Average in-place net rent per occupied continued to rise in the quarter, reaching $23.35 at quarter end, and we continue to achieve rent increases on renewal. As a result, NOI and same NOI were a bit higher than forecast in the quarter, which is good. But then when you go down here, you look at the interest expense. It's up almost 50%. Yeah, because it's negative. Yeah, it is up almost 50%. And that is purely due to the interest rates that have been risen. But that's a little bit concerning to look at. Net loss, you don't care about that. You care about FFO and AFFO. You don't really count this at all. Amortization, interest income, which I don't know why it's up 38.7%. Rental revenue is up 14.5%. FFO, this is what we actually care about. So a lot of people will go for FFO. You should go for AFFO, adjusted funds from operation rather than funds from operation. And look at that jump. I'm hoping you guys can see this, but look at the jump in the payout ratio. 78.2 to 84.4. AFFO per unit is down 4.5%. A little bit concerning. But AFFO as a whole is up 4.1. Now, this is the 3 months ending March 31st. So, we're going to look for Allied Properties REIT Q4 2022 earnings. Let's do that. I hate Market Beat when it does that. Do you want to join our thing? Come on. I think it's press release we want. No, it's financial reports. And it's Q4. I think that's December. Annual year end. So what was the payout ratio in Q4? Oh my god, we gotta zoom in so far. Was 79.9%. So it's up like quite a lot actually. Now, given these guys, it does fluctuate quite a bit, like 82% in 2021 and then 79.9% now. It's just basically bounced higher than 2021. So it's not bad, but there's still very much struggling, which is actually kind of sad because don't want to see that. What was the AFFO? 79 million compared to this one, which was 74. So it's actually down too. Yeah, I'm not impressed by it. I'm very meh. Operating income in the first quarter, in large part because of development completion, acquired from Choice Properties REIT at the end of the comparable quarter last year, despite intervening uncertainties. Allied made measurable progress with the portfolio. Is only up slightly after a year of ownership. Average in-place net rent per occupied square feet increased 5.5%. The average lease term increased by 21% from 4.3 to 5.2 years. Annualized NOI increased by 3.9, and the IFRS value increased by 4.8%. Considerably high interest expense in the first quarter put downward pressure on Allied's FFO per share, which is 58 cents for the quarter, slightly below internal forecast. AFFO per unit of... I have no idea what that market beat account is. I'm going to ignore that. AFFO per unit of 53 cents was above. Recorded a fair value loss on investment properties of 78 million. Whatever, it doesn't really affect anything. So, okay, assets, where's the liabilities? So debt is 4.3 million. Total assets is 11 million. Held for sale is 9.7... That's billion, right? Yeah, $9.7 billion. Debt is 4.3 billion. Total indebtment is up. What was it the year prior? Okay, so it's slightly up. It's not up by very much. So that's good to look at. NAV I don't care too much about. That's just whatever. EBITDA of 411. So that's for this last one. 426, so slightly down. Leasing had 243 lease tours, slightly higher than the 240 in the quarter last year. Occupancy in lease area declined to 88.2% and 88.8% respectively. So occupancy is down and leased area is down, though they were a bit better than forecast from quarter end. The modest decline from the prior quarter was driven by non-renewal in Kitchener, with a large, long-time user moving into an owned building, and the transition of the Lougheed building in Calgary from PUD to the rental property. Allied is advanced in replacing the Kitchener user and working with an educational organization towards leasing the building in its entirety. Interesting. Average in-place net rent per occupied square feet was up, and I continue to achieve rent increases and renewal, up 11% ending to start base rent, and up 18% average to average base rent. As a result, it was higher. Yeah, and this is what I was looking at a while ago, which made me kind of meh on it. Given a scale of Allied's rental portfolio, upgrade activity is now constant in all markets, particularly Montreal, Toronto, and Vancouver. The goal of the upgrade activity is to serve users better and boost net rent per occupied square foot over time. Allied rental portfolio was comprised of 14,047,591 square feet of GLA in buildings that are largely stabilized, and 375,061 square feet of GLA in buildings that are undergoing active upgrade. The occupied area of the former was 88%, with leased area at 89.3%. The occupied area of the latter was 68%, with lease area at 69%. Then this is the biggest one. They're selling their urban data centers, which they go over basically Scotiabank and CBRE is helping them, and contacted nearly 100 potential buyers worldwide in January. 30% of which signed a non-disclosure agreement and gained access to the virtual data room. Allied received first round bids on March 14th and narrowed the field for the second round and again for a third round, at the end of which it expects to receive firm bids. While management cannot yet be certain as to the outcome, it expects a firm agreement and closing within the parameters anticipated when Allied embarked on the process, aka next quarter. They're expected to close this, but we'll see what happens. Allied's principal motivation in selling it is twofold. Allied wants to reaffirm its mission and pursue its over the next few years with low-cost capital. It wants to supercharge its balance sheet and reduce its dependence on the capital markets going forward. You love to hear that. Basically, we don't want to issue a ton of stock and rely on the capital markets going forward, which is something they can't really do because the stock price is down so much, which that's just amazing to hear. Allied expects to use most of it to retire debt and the balance to fund current development activity. They may elect to use a portion of it to buy back shares under its NCIB. It does not expect to use any of the proceeds to fund acquisitions, nor does it expect to engage in material acquisition activity in 2023. And it says Allied's internal forecast for 2023 calls for a low to mid single-digit percentage growth in each of the same assets: NOI, FFO per share, and AFFO. And yeah, so overall it looks okay at best. I know there's gonna be a lot of people that are really unimpressed, especially me with this like lease terminations right here. But you know, everyone's different. Overall, I'm just super neutral on it. Like, I don't have anything amazing to say, and I don't have anything bad to say about it. It's just very meh. The one thing that scares me is that payout ratio that exploded. But, you know, we just have to sit back and just watch and just see what happens. But honestly, I own this stock, again, 50 shares at $23.97. Yeah, $23.97. I don't think the stock's going to go anywhere tomorrow. I think it'll be very flat, but it also might, you know, not really be the best at all. So I don't know. It could go down a whole ton, but I'm probably not going to buy any more for the foreseeable future because I'm not impressed. But yeah, guys, have yourself a good night. Bye.